Good afternoon, all. CamelbackTrading.org coming to you this Friday afternoon, June 24th, and we are looking at Window Trader's market profile. SPY, IWM, and triple Qs. It's great feeling when you see the market well, and boy, I think we saw the market pretty well these last couple of days. Not surprised at all by what happened today. Kept the room out of trouble. There was no way in the world early on in A and B to look for a short, and again late in the day, KL and M. We did get a lot of two-sided trade in for 3-4 hours, that's for sure. But then the Three Stooges did their thing and ripped to new highs. SPY actually filled their gap in the last 15 seconds of trading. Remember, because of the dividend, we're behind the ES, and ES actually got their wide park from the 10th. That's the next destination for SPY. Russell and Qs did not take out their IB high until the last minutes of the trading day. Qs did it with like 10 minutes to go. Russell did it with like 15 minutes to go. Amazing. Russell ends 12 wide. Qs 9 wide. We were 8 wide. Now, we always talk about price vacuums. Well, now we have tremendous amount of reference points to the downside from today. Tremendous amount. Price probe, price spikes, pullbacks, single prints, lowest accepted price. You name it, we have it. I had a good day. Nothing but longs all day. I didn't take anything after H. And here's the reason why. I was looking for a bigger pullback. G didn't give me a pullback. I gave us nothing. So I was looking for a bigger pullback that I wanted to load up on. It didn't happen. And I wasn't going to chase because we weren't getting any distance away from B's high. It took until K period to start getting distance from B's high. And then when they finally did, they ripped. So never pulled back enough for me. And then even K and L, they were lulling you to sleep, and then M period just ripped. And you know, most times I don't like to trade M. Stayed out of it. Had a good day, so I wasn't going to go chasing. But seeing the market is very, very rewarding in itself. I'm not going to go over all my trades, but I can tell you, A, B, C, D, I did nothing but long this market with 384 to 388 calls. Just longed it the whole way. Back, a bunch of times and did very well. And then I didn't do anything after that until H, when I thought we would finally pop at F's high, get a new high, and fill ES's gap, which we did. And then, again, I didn't do anything after that because the market really was just sitting there in I and J, and then finally it got going, but I watched it. At least I didn't short it. I can tell you that I can't imagine how many people were shorting A and B, wishing, hoping, and praying for the market to come back. It never did, and then kept shorting the highs, thinking, okay, well, it's going to come in, and then get ripped apart again in K, L, and M. I hope that's not the case, but unfortunately that happens to a lot of traders. And that's why I say, you know what? For $30 a month, $1 a day, you're in my trading room. I don't care if you don't take the long, but I guarantee you're going to not take the short, right? And not get hurt. So that's the big benefit of this trading room, the way we try to keep people out of trouble, deciphering what the market's attempting to do, and get them on the right track. We're all filled our weekly gaps. We're all back in balance on the weekly. We're all up on the daily. How's this for a little bit now? We had 2 large gaps to the downside. Only 1 large gap remains for ES and SPY now from those downside gaps. And now we have 2 gaps from this week to the upside, right? We had a nice gap today over $2.50, and we have the other one from the other day, which is like 80 cents. So things are turning here. And I expect them to continue to progress this way at least through next week to finish the quarter. And, this quarter is horrible. We're still down. We can close it, even if we close at 400 in SPY next week, we're still down $40 or $50 for the quarter. So, there's no window dressing to this quarter. But at least it'll look a little better. But more so than the quarter, it would be psychologically better if we can get above the 400 level in SPY. Okay, does that make sense? So we'll see if we're able to do that next week at some point. As far as destinations, we have today's high of 390.09, which is now a weekly high. Then, now again, these are different from the ES. SPY was 11 wide on June 10th, 391.28. Then 394.25 afternoon rally high from June 10th, and then 395.78 daily high, and then filling that other huge gap at 401.44, a 566 point gap from June 10th. And we'll stop there. Now for the downside. These are all from today. L's high, price probe, 388.15. H's high, price spike, 387.63. G's low, afternoon pullback low, 386.54. Single print, C's low to A's high, 385.66 to 384.14. B's low, lowest accepted price. You think that's a powerful tool? This is where A closed. This is where B opened. Never looked back. 380 is the lowest accepted price. And then today's low, 381.37. And then filling the gap at 378.83, a 254 point gap. And that's why I was looking for nothing but longs when we were just flying. I wasn't chasing, but any pullback we got of any semblance, I was getting long and did very well in it. So let's get to the charts now because we want to break down all three of these indices charts. We're going to start with the little fellow, Russell. And Russell had a lot of rebalancing today also. So don't forget, it's amazing it took so long to take out the day's high. But when they did, they started moving. Okay, so here's IWM. The monthly is still down, plain and simple. We've rallied off of, remember 173.39? I said that's still a very important level. Well, we closed at 175.09. So they're still going back and forth through it. But we dipped below it twice, last month and obviously this month by a lot. So it's going to be important at some point on the longer time frame, which is the monthly, to get acceptance above there. The monthly is still down, plain and simple. Weekly, balance. We finally took out last week's high late in the day. It's a 2-week balance. Now remember, their gap is still alive on the weekly in Russell. It does not get filled until 177.65. So they still have $1.55 to go. So the monthly is down. The weekly is balanced with the gap being a main focus. And then the daily is up. Boom. Popped out of a 3-day balance, up. The gap is still their main focus. Russell has 2 gaps still to fill. On the upside, 1, 2. We only have 1. So does Q's. Russell only has the 1 gap to the downside. That's today. They never held the gap from the other day. So Russell's still acting the worst in the bigger picture because they still have 2 gaps to fill on the upside and they only have the 1 gap to the downside. But for now, the monthly is down. The weekly is balanced. Gap main focus. Daily is up, gaps main focus. Let's go to Q's. Monthly is still down, right? We said the next target was the 260 to 266 level. Well, what did we get down to this month? 269.28. Is that all they want to do on the downside? I have no idea. But we know the monthly's still down. Until we take out a monthly high, to me the monthly's down. So did we get close to this level and now that's all they want to do? That's quite possibly. But until they take out a monthly high, we're still down. Weekly, balance. It's a 2-week balance. This week, last week. If we take out this week's high next week, the weekly will be up. Yes, we'll be in a previous 5-week balance, but I would be calling the weekly up if we take out today's high at some point next week. Okay? And then their target would be the top of that 5-week balance, which would be the 314.56 level. So the monthly is down, the weekly is balance. Daily, up. Came out of a 3-day balance with a vengeance to the upside. Finally blew through the 20-day moving average late in the day. 1 day doesn't make a market. We closed above it by about 70 cents. But 1 day doesn't make a market. You want continuation on the daily to get acceptance above the 20 and then to go to the 50. So the monthly is down, weekly balance, daily is up. We're all the same, by the way, but there's different things going on. Here's ES and SPY. Monthly is down, right? The big target on the monthly was 362.03. SPY got to 362.17. Now, I know ES didn't get as close. We got that low because of the dividend. But that's pretty damn close to our next major target. Is that all they want to do? Again, until we take out a monthly high, I'm going to say I'm keeping all my options open because the monthly's still down. If we take out a monthly high and come into balance, then we might have put in a low for a while. Remains to be seen. Monthly still down. Weekly, balance, 2-week balance. If we take out today's high on Monday, weekly will turn up, and then we go for the next big level, which is on the weekly, 417.44. Now there's a lot more to do inside of the daily, right? So the daily has a lot more work to do because we have what? We have the 20. We have another large gap. We have the 50. So before we start thinking, getting sugar plums in our head that we're going to get to this 417.44 level, there's a lot more work to do on the daily. But for now, things change very nicely for the buyers and the bulls. Monthly is down, weekly balance, daily is up. Gaps are my main focus. There's two of them. One here, and then you have that one upside gap still to fill. 94 million on the tape, so the volume increased pretty good late in the day. But it's still going to be below average, which is 109, just under 109 million. So again, let's put things in context and perspective. This was nothing more than a vicious short covering rally and momentum buying. Where did we get nuances though? Remember we had those wide pops when the market was going lower? And I said maybe that's long-term money absorbing? I'm going to think it very good odds that it was. This is not long-term money that traded this market up today. This is panic shorts because look, we came in, we spoke about this. We came in $50 from this 8-day balance from 407 to 362. That's $45 we came in. The market was incredibly short. So once we come out of balance and start eating away at these gaps, they panic. Especially now we have two gaps down to the downside. It's emotional trading now, just like this was emotional trading. The higher we go, the more shorts are going to cover. Don't forget, we have shorts here. Who provided the floor today? Every time the market didn't pull. Look at this 30-minute chart. This is today. We didn't pull back once. We stopped one time framing up in 2 time frames. So who provided the floor the entire day? Short covering and momentum buying. Don't think for a minute long-term buying was buying this. Where was long-term buyers buying it? In all these days when we had these wide pocs. That's where they were in here. Not this. The floor today was provided by short-term momentum buyers and panic shorts. Plain and simple. Does short cover make a market weaker? Of course it does. Of course it does. But it can go on for days or weeks. We don't know. Maybe we get all the way up to 417. I don't know. Or maybe we get one more day of it and that's it. But if you're a day trader, just because it's short covering doesn't mean, don't get fooled by that and say, okay, it's going to roll over right away. Again, I think these videos are free and they provide valuable, I hope, information to you guys and gals watching it. Appreciate you liking them and subscribing to it. Tell your family, friends, and co-workers just to subscribe to the YouTube channel. Get a good feel for what the market's doing, even if they're not a trader. If you are a trader, again, for $1 a day, come check me out for a month. What's it going to cost you, $30? Come check us out and see what we provide. I hope you had a great week trading. Enjoy your weekend. Stay safe. And we'll speak most likely prior to the opening on Monday. I have an appointment I'm hoping to have a video, but I will be back for the opening.